Good afternoon, ladies and gentlemen, friends and colleagues. It's my pleasure to be with you today. And on behalf of Accuindex Limited, I would like to welcome you all and thank you for attending this lecture. Let me introduce myself first. My name is Dr. Majid Elayyan, the General Manager of Accuindex Group. In fact, I wished I had enough time to explain in more details about one of the most important subjects related to financial markets, but unfortunately, I must stick to the time set for me by the organizers. But however, I will try my best to cover most of the important points briefly within this short time as much as I can. The subject of today, which I'm going to highlight today, is the market analysis. Market analysis and the factors and influences that affect the market movement. I am sure that most of you is aware of market analysis methods. In fact, of course, due to the fact that most of you, maybe you have good experience in this business and familiar with this business, and maybe this lecture will be most important to those who are new to this business and those who have no experience. Market analysis. There are two types of analysis in the market: fundamental analysis and technical analysis. And there is a debate on which is more important. Is it technical analysis or fundamental analysis? In fact, I believe that both analysis is very important. We cannot depend only on one method. See, that's why we have to work with both. As a traders or as a brokers, as a professionals, we must be aware of all the political and economical situations in most of the major countries, that in addition to be updated and to know the economic data that is released on a daily basis from different countries, especially the major countries like United States, like United Kingdom, like Japan, Canada, Australia, etc. In fact, most of the peoples or most of the traders, they believe, from my experience, I met many of the traders, they keep saying, I am a technical analyst. I am a fundamental analyst. Believe me, none of those peoples, if they work only with one analysis, they will never make any success in this business. Now, before we go into more details, there is a question to be answered. Why do we use fundamental analysis? For what? In fact, we use fundamental analysis in order to help us in turn our investment and stock market strategies into actual buy and sell decisions. As professional traders, all what we do in terms of market research or market analysis aims to define our compass in the market and which finally translate into real and actual buying and selling transactions. As a brief or as definition of both fundamental and technical analysis. What do we mean by fundamental and technical analysis? Fundamental analysis is a way of looking at the forex market or stock market by analyzing the political and economic plus the social forces that may affect the market prices, either currencies prices or stock prices. And the reason behind that is that if the country current and futures economic outlook is look positive, definitely we can expect that the country currency should strengthen. Based on that, traders should be smart enough to place their orders, for example, to buy at the proper level, at the suitable level, for example, when we expect that, for example, this currency will rise for the purpose of making a good profit. Now, in the other side, forgive me, I have to drink water, huh? I did not take my lunch till now. Now, as a definition for technical analysis is a study of market action or price movement through the use of charts, of technical indicators in order to, for the purpose of forecasting the future price trends.
Dear attendants, refreshment break is about to end, and we will back in conference hall in 5 minutes. Next speaker will be Mr. Majid Elayyan from
I am here.
Accuindex. Please maintain social distance.
Thank you.
Yeah. ضيوفنا الأعزاء، نود إعلامكم بأن الاستراحة على وجه الانتهاء. سوف نعود للمؤتمر خلال 5 دقائق. المتحدث التالي الأستاذ ماجد العيان من Accuindex. الرجاء الحفاظ على مسافة التباعد الاجتماعي. شكراً لكم.
Thank you. Again, I will repeat, the definition of technical analysis is the study of market action or the price movement through the use of charts and technical indicators for the purpose of forecasting the future price trends. In fact, when we talk about technical analysis, we talk about, for example, many informations we need to discuss, and I believe that during this lecture it will be very difficult to, for example, go in details in technical analysis. We might conduct another lecture in order to discuss technical analysis in details. Now, as we know, the market prices are moved based on demand and supply. When there is more demand on certain currency or stocks, people tend to buy and go for long for this currency or for this stock. See, that's why demand and supply is the main thing in this market. Now, what is the main factors that affects the demand and supply in the financial market? In fact, there are many factors affecting the demand and supply. First of all, political situations. Here we talk about, for example, elections, which has very strong impact on the market prices. And we have a live example. For example, regarding the US presidential election and what's happening and what was happened during the last 1 or 2 months, till now. Second, social stability and the unexpected accidents. Social stability, for example, like major crisis. A crisis by, for example, the opposite party in any country. Plus, I'm sorry to say that there is a terror attack. This is for, nobody can expect that it will happen. Earthquakes, any events or any accident that out of our control, see, it might affect this business. Business is very sensitive. It can be affected by any reason. Number 3, economic indicators. As we know that each country, they have a group of indicators, economic indicators. Indicators related to unemployment rate, related to non-farm payroll, personal income, housing starts, initial jobless claims, gross domestic products, a lot. On a daily basis, we can see that there is a list of data released from different countries. Some of those data are published, for example, on a weekly basis. Some of them bi-weekly, some of them monthly, some of them quarterly. See, that's why as a smart traders, I am really surprised those who do not even pay any attention to the market data, which is very important. Sometimes I receive a call from people, for example, Dr. Majid, why gold, for example, for 30 or 40 points suddenly? They don't know. In fact, they should be aware in advance. The smart broker is the one who is ready, for example, to place his order. When do we expect, for example, we are professionals? See, that's why before even for example, data released, I should be ready with my order. I do expect, for example, non-farm payroll, the actual compared to the previous and compared to the forecast, it should be, for example, better or more. Definitely after that, I know that, for example, dollar will be strong or dollar will be weak. Based on that, I have to place my order. And we can talk about economic data in more details. Number 4, actual and anticipated rate of inflation. Inflation. I'm sure that there are many people who don't know what is the meaning of inflation. They don't know what's the inflation. Just only they repeat, only talking that there is inflation, but none of them knows why inflation has happened, why deflation has happened, and how, for example, to control and stop the inflation or control the inflation. We will talk about inflation and deflation in the next slide. And interest rate. When the government or central banks decide, for example, to rise or increase the interest rate, is it just a matter of fun? Why do you increase? What is the reason that the government, for example, decide or the central bank decide to increase the interest rate? All of these actions is related to the inflation. Related to the inflation or related to the deflation. See, that's why interest rate, cutting interest rate or increasing the interest rate is a very sensitive action taken by the government and by central banks. See, that's why it is part of our job to be aware of all these details in order to be considered as one of the professionals in this business. I am always with the knowledgeable peoples, those who have good knowledge. I hate peoples, those who don't have knowledge. They refuse even to understand. They refuse even to learn. See, even if you, for example, you want to gain the trust of if your client, you should feel that, for example, you know everything about this business. You have good knowledge about economy, you have good knowledge about political situations. Based on that, for example, people trust you. Number 5, I don't know, 5 or 6, 5, rate of economic growth. And number 6, the balance of trade. Now, regarding the inflation, as the details, just only brief. Why inflation happening, guys? Why? Who can answer me? Why inflation happened? Why inflation occur? In fact, inflation occur or happen when the prices of goods and services rising at high levels, and the power of the currency, the purchase power of the currency get decreased. For example, if this is cost $10, now, for example, during, for example, the inflation, I have to pay $15 to buy this. $15. It means that the price of this product get increased and the currency power get decreased. Okay. The price is too high. What is the solution? What shall we do? What shall the government do in these situations? Immediately, the government and central bank conduct a monetary policy meeting in order to decide to fight this inflation, to fight against this inflation. By what? By increasing the interest rate. When they increase the interest rate, see, it will not be easy for you or for me, for example, to, request or get loans from banks. It will be not easy, right? Plus, it will be difficult even for the business to continue expanding more and more. See, that's why it will cool and control the economic activities in order to come back to the normal situation. See, now, increasing the interest rate, it has two side effects. For the long term, when we keep increasing the interest rate, we might reach to the opposite side, which is the deflation. Deflation. Now, when the deflation happen or occur, deflation happen when the inflation rate goes and fall below than zero. Below than zero. See, that's why also central banks and government should take immediate action for what? To encourage people to invest more. That's why they reduce the interest rate or lower the interest rate to encourage you, to encourage her, for example, please come and take loan, right? To activate, the economic sector, to activate, for example, the industrial sector, right? Again, the circle is now again moving from deflation to inflation, from inflation to deflation. Now the central bank role and job and the government job is to know how to balance, the inflation situation. Now, by increasing the interest rate or decreasing the interest rate, or there will be impact on three main sectors: on businesses, on consumers, on markets. Now, by increasing the interest rate, which is considered as effective way to quell and control the inflation, but there will be impact on the businesses. For example, higher market rate make it more difficult for businesses to get loans to expand. In other side, also unemployment rate tends to rise, which eases wage inflation. In consumers, Higher interest rate will cool the consumer spending. It will not be easy for the consumer, for example, to spend freely, right? Because there is a cost here. On markets, higher interest rate will push the investor to escape to the bonds and the fixed income investments, which leads to pushing down the stock market. In the other side, by lowering the interest rate, we can expect exactly the opposite. Exactly the opposite. Now, rate economic growth, one of the main factors affecting the demand and supply. When there is a slow down of economic growth, would have a negative impact on the country currency. It means that the demand on the export from overseas is low. Less demand from the overseas. That's why there is a slow down in economic growth. On the other side, growth in the economy would be positive to the country currency. It means that the exports are improved and there is recovery of the commerce and industry sectors. Balance of trade. The balance of trade refers to the difference between the monetary value of the country's imports and exports. Of course, over the given time period, now a positive trade balance. What do you mean by a positive trade balance? When our export is more than import, okay, it is considered as positive trade balance. Now, positive trade balance indicate what? Trade surplus. Trade surplus. In the other side, when the import is more than the export, okay, it indicates what? Negative trade balance, which means trade deficit. Now, going back to the economic indicators, which is very important. As we know, that each indicator reflects certain sector, the performance of certain sector. The most important economic data that are related, for example, to the labor market, like non-farm payroll, like unemployment rate, like employment change, personal income, initial jobless claims. See, that's why it's one of the most important sectors that the government pay attention always, for example, to find a solution for unemployed peoples in order to make sure that this sector is stable, because it's very important to make sure that this sector should continue or should be stable. Some of them, with the actual reading compared to the forecast or compared to the previous reading, is more, it will be positive for economy. Let me talk about, for example, gross domestic product, which is one of the most important economic data. Gross domestic product represents the total value of the country production. See, now, if the actual figures or actual reading compare to the previous reading or compared to the forecast, see, immediately we can expect that it will be positive for the economy and positive for the currency or the country currency. In the other side, unemployment rate. This is very sensitive. For example, if the actual reading for this report compared to the previous report, is more than the previous, but it's matching at the same level of forecast. See, we do not expect, for example, much movement. But in case, for example, if the actual reading is more than the previous and more than the expected figures, see, what will happen? It will be very bad for your economy and very bad also for the currency. Increasing in unemployment rate, it will be negative for the economy and for the country economy, and increasing in some other products or some other indicators will be good for the economy. Thank you very much, and hope to see you again, inshallah, very soon. Thank you very much.